Joe, how you doing?
I was looking the wrong way. Yeah, mate, I'm doing good. I gotta say, like the new office and all the setup, the new mics, the new screens.
I know.
Stay lit.
It's beautiful.
Mate, so sick.
I know.
Everything.
I know,
so
it's
sick.
amazing, right? And this is the first time we're seeing each other in person since March.
Yeah.
Because, I didn't see you. Remember, I went to Bali. So that was the last time I saw you before I went.
Yeah.
Mad.
That is so mad, isn't
Weird,
it?
isn't it?
Because like we've been in touch like so much, it doesn't.
I know.
It almost kind of doesn't feel like it, but
Yeah.
it's been, bro. That's what, like 3.5 months.
Yeah, dude.
Yeah.
Where's that gone?
Oh man,
It's insane, isn't it?
Yeah.
It's insane. But, man, I think let's just go straight into this. I mean, last couple of weeks in the markets haven't been as sexy as they could have been, really, have they? Last couple of weeks.
Not as much. It's maybe it's that summer feel because usually you get like thinner trading volumes in the summer. Potentially, a lot of people saying it could be that less volatility. But yeah, I'm sure it'll pick up again though.
Yeah. I mean, at the moment, one key thing I think is that the markets we're just caught between two themes. You know, obviously one risk on all this improving data, and then the other just a bit of caution because of the cases are still rising, aren't they?
Yeah.
So it's just trying to fight between those two at the moment. You know, people are scared, I think, to commit really.
100%. Just consolidation patterns really, like across the board.
Yeah, exactly. But I feel like, and I said it in my Monday Money Madness video, that big breakout of risk on's coming. And I mean, we had a taste for that on Monday, didn't we? That dollar was smashed.
Yeah.
Really took a beating.
Yeah.
You know, so inviting a lot of selling pressure. And I think the data's been good. You know, manufacturing PMIs, services, and then NFP. It's all been good, right?
Yeah.
Really?
Yeah.
Since
Oh, mate, 100% agreed. And like just to add to that a little bit, like you were saying, dollar was getting slammed because of risk on, which it was. But also this week we've had quite a few Fed speakers and they've been quite dovish. And obviously they're highlighting this increased risk of a second wave of coronavirus in the US. But everybody knows about that. But the fact that the Fed are going to go even more dovish could be supporting risk appetite even more. So like you say, going forward, something like an even more dovish Fed could help that risk assets with that next leg higher.
Agreed. Yeah, because the Fed over the last a little while has been quiet, haven't they? Like in terms of action. You know, we had that massive period when they were just doing something every single week.
Bro,
it was insane.
Emergency moves every day. Yeah.
It was mental.
Yeah.
And dollar was just taking an absolute beating every time.
Yeah.
But they've calmed down for now. I guess they're just trying to evaluate things a little bit. I'm just going to pull up the dollar here. Remember, we had a bit of a... Let me take that off. We had a bit of a weird one yesterday, didn't we? Yesterday on Thursday in the markets. You know, dollar staged this massive rebound, didn't it?
Yeah, it did. Absolutely. I mean, there was just a complete shift in tone, like you say. So dollar was getting hit all week and then a big rebound. And it appears that the reason for the rebound yesterday in the dollar was actually to do with US political uncertainty because we had that stuff come out about Trump basically now he's going to be forced to hand over his tax returns. And yeah, like we were talking earlier about it, I personally wasn't 100% sure why that would trigger massive risk on and dollar strength because potentially if it means that Trump's election chances are now lower, like we were saying, wouldn't that potentially mean a weaker dollar? But then you said about just general uncertainty, I think that's a good shout.
Yeah, because I think Trump's more of a dollar positive. You know, I think if you're going to start Democrats, you know, giving Trump a good run for his money, I think it's uncertainty. Just like, for example, us in the UK, Boris Johnson was seen as a pound positive. Yeah. Jeremy Corbyn, Labour, was seen as a pound negative, right? Because these guys, the Conservatives, the Republicans, they're more pro-business, you know, and this is seen as great for the respective currencies, right? So, you know, I think, I'll just look at the chart here. Can you see that all right on the camera, by the way, Dan? The charts. My head's in the way. Okay. Still in the way? Right, I'm going to do something a bit unorthodox here. All right, can you see the chart? Yeah. So basically, I mentioned this in the Monday Money Madness, how we'd consolidated in this channel structure. You see that, Joel? Just this channel here, this near-term one, bear flag. And we broke out of that. We retested and made way further downside. Something we pointed out quite nicely for the members. And that really invited a lot of the risk-on moves. Yeah. Like Euro went flying. We went firmly above 113. Everything was just flying. But then, you know, yesterday threw a bit of a spanner in the works. But I still believe there'd be some dollar downside to come over the coming weeks or so.
I
Yeah,
agree.
look at that. 3 weeks of straight selling for the Dixie.
Yeah.
If you look at the Dixie, yeah.
Yeah, it's a lot. And I think it's 3 straight months now as well, if you look on the
Check.
monthly.
Let's have a look at the monthly.
Pretty sure it was.
Yeah.
3
Wow.
straight months.
Wow,
Yeah,
man. That's some deep selling.
That's the Fed flooding the market.
This is interesting. This is like technically here, yeah? This is known as like an M structure, okay? Here's our first arch, M, and the neckline. We're at the neckline area at the moment. There's a lot of support here. Wow. Okay, if that breaks, we're really going to sell hard. And it'll be this next major area if you look down here around sort of 93. Wow.
And fundamentally speaking, I think there's absolutely reason why that could happen. It's like what we're seeing in the US with coronavirus cases still getting worse, Fed going more dovish. But then on the European side of things, you always have to consider that obviously as well. Like they're moving closer to this big deal on fiscal stimulus.
Yes.
So that could be a big euro positive.
Big.
And they've contained the coronavirus much better than the US, which could be another big like economic positive. So definitely could see more dollar downside.
Very well said. And bear in mind, that, most of the dollar's movements, well, if we look at the Dixie anyway, that's euros over 50% weighting of that. So that could really drag that down. Yeah, man, we could really see euro flying. Never know, returning to the 120s.
100%.
Yeah,
100%. I've heard a lot of other analysts talking about like the 120 mark being a potential target.
Yeah, man, makes sense. It makes sense. I think there's one more thing. GBP's been a decent performer this week, generally speaking, hasn't it? You've been a decent push higher. There was optimism with Barnier and David Frost.
Yeah.
David Frost, isn't it?
That's it, yeah.
And then they wined and dined together at Downing Street. God knows what they got up to.
I think, I don't know what they're getting up to. But I think the main thing was there were some rumours. I mean, there's always rumours about Brexit. But there were these rumours that the EU was going to make a big concession on fisheries. Something called zonal attachments. I mean, we're not fishermen. We don't really know what that is.
No.
But apparently it's a good thing for negotiations. So, a bit of optimism on that. And then there was the whole thing with Finance Minister Rishi Sunak. He came out and sort of gave more detail on the UK's economic recovery plan. So I actually love this, like from a personal perspective. Don't know about you. Like, did you see about the restaurant vouchers?
The restaurant stuff, yeah. I mean, it's selective restaurants though.
Oh, is it?
Yeah. You know what I thought was really stupid from that thing? Not the restaurant thing, it's great. It's great.
Yeah.
The thing that's really doesn't make sense for businesses, okay? So they're saying you will get, as a business, you'll get £1,000 bonus if you keep your workers, you don't like cut them, basically. You keep your workers. Bear in mind, if you're struggling as a business and you need to cut people, you've got to cut people. But they're saying if you keep them on, keep paying, forking out all this money, guess what? We will pay you £1,000 bonus in February if you keep them on from now until January. Just £1,000 per employee.
In February?
Yeah, in February 2021.
Oh, dude, I thought it was like an immediate...
No. You get £1,000 bonus in February for every employee. But you got to think, say everyone's getting paid around between 1 point something to £2,000 a month. You think that £1,000 going to one-off £1,000 going to incentivize businesses? Come on.
Yeah.
Don't even
barely
bother.
going to make a difference, is it?
Barely. They're going to be better off cutting these people, unfortunately.
Yeah.
So I thought that was very stupid. But anyway, GBP Bulls loved it. It's an extra bit of stimulus for the economy, a bit more support, whatever.
They did.
So, yeah. Okay. What else we had this week? It's pretty...
I think one thing, gold going above 1,800.
Oh, that's a big one.
That's a good one.
That's a big one. You know what? Over months and months and months of last year, I've posted this in my Instagram stories before, but I was always calling gold to the north, like towards $2,000. And it just made sense because at the end of the day, look, there's been a lot of risk, obviously, on the trade war front, geopolitically, obviously coronavirus. And even if there isn't risk and people are like piling into equities the way they have, they need a hedge. And gold's going to be the hedge.
So true.
And obviously all the central bank stimulus as well.
Yeah. I mean, for me, that's like a massive thing for gold. Because actually gold recently, I don't know if you've noticed this as well, but it's actually, in terms of its intraday moves, it's more correlated with risk assets.
Yes.
And that's just because of its inverse relationship with the dollar.
Exactly.
So if we do see that dollar trend weakening because of all that central bank stimulus, for the same reason, gold keep going.
Still flying, baby. $2,000 and beyond.
Mate, I agree. I reckon it will.
Yeah. I think this year it's got to be up some. Let me just think. I think it's up now like 60% on the year, which is not a bad investment, is it? If you got. Yeah. So where are we? April, January. Okay. Am I exaggerating? 20%. No.
20%. What was it at the start of the year? 1,500.
Why did I say 60%, bro?
Yeah, it was 8%.
60%. All right, so 20% is up.
But that's still decent. 20% in 6 months.
Yeah, it's incredible.
That's well good.
So from the back end, anyway, from October, all right, anyway, 20% still good return.
A lot.
That's a chunky amount. That's much more than you get in your bank for sure.
Yeah.
What's crack next week, dude? Let's wrap this up.
Well, it's actually quite a busy one,
isn't
yeah.
it?
Yeah. So I mean, we'll start with central bank action. We got BOC and ECB. Not actually probably going to be that interesting though. Neither of them going to do any policy changes. It'll just be like about the tone of the meeting. Are they optimistic, pessimistic, that kind of thing.
I think there'll be a bit more optimism.
Yeah, that's what people are saying.
Drive the euro further higher.
Yeah, exactly. But the only thing with the BOC is that obviously the Canadian economy is quite closely tied to the US.
Yes.
So they might not be as optimistic.
I don't think they will be. Yeah, I was speaking more about ECB. I think they'll be optimistic.
Yeah.
But yeah, I think, Bank of Canada. I think they're a little bit premature, scaling back their operations a little bit. Very premature, I thought.
Yeah, potentially.
We'll see.
We will see.
See. What else?
UK data, quite a lot of UK data, like, labour market, retail sales, CPI, also US retail sales. I think those are the big ones.
Yeah. Okay. Nice. Sweet. Well, it's going to be a exciting one. It's going to be
actually is. Yeah. Finally.
Yeah. Thank goodness. All right, dude. Well, look, great. Awesome. That was nice one. We need to work on his sign off. Let's get it.